My friends, what is going on? Welcome back to the channel. So I promised I'm going to try to do Tuesday and Thursday update videos. I want to try to live up to that promise. I'm also going to try to keep them a little bit shorter than my typical videos. I'm going to try to keep them in that, somewhere around 15 to 20 minutes at the most. I want to cover as many charts as I can. I'll always ask on Tuesdays and Thursdays for tickers that you want me to look over, and typically the ones with the most ask are going to be the ones that I try to cover the most. I'm going to try to give you a quick little breakdown of a whole bunch of charts that I've been tracking lately with potentially good setups. If you're new to the channel, first and foremost, thanks for stopping by. Please like and subscribe, comment, all that good stuff. If you haven't done so already, please follow me on Twitter, Colin_Gladman. That's going to be the easiest way to keep up with everything that I think is kind of going on, market related, charts related. Try to post a lot of good setups. My particular entries and exits that I do on trades, you can find in my Discord, and I will put a link to the Discord in the description of the video. Please feel free to join. If you don't want to join, no problem. I will keep putting out as much free content, as good setups as I possibly can. So having said that, let's kind of jump into it a little bit. So let's start with futures. So I talked about this rising wedge on Twitter not too long ago and said this is basically a ticking time bomb. It's going to break down, and then it was that day it broke down. Then it since has recovered, and if you extend this top line trend out, you can pretty much see that's where it stopped. Now here's what I don't like to see. I don't like to see another push up on particularly weak volume. To me, that signals usually it's going to be a distributed pattern, and what that means is it's going to come down. So if we look at like a fib from here of top to bottom, I wouldn't be surprised at all to come back down here to at least a 0.5, maybe even the golden pocket. But fibs are going to be great for giving you levels of potential mathematical retracements. So, and the 618 is going to be the most common. If we're over here looking at SPY, I don't know why my trading view always does that. Every time I go back to SPY, it always has this weird fib just sitting in the middle of nowhere. Anyway, if you know how to fix that, let me know in the comments. So if you've been following me for a while, you know that this has been what I've been tracking overall. I'm actually going to get rid of the volume here just so you can see it a little bit better. But virtually every bear rally that we've been in since the market started tumbling over a year ago, we've never pushed up past the 786 retracement on any of those. And you can see if we do a fib from the August high to the October low, almost to the tick is where on the 786 is going to be where we then got pushed down again. Now we're really struggling to find support up here in this golden pocket area. It got rejected off. If we start to lose the 200 moving average right here, which is basically going to be right around 395, 396, I'm going to get pretty bearish at that point in time that at a minimum we're coming down here and testing this upward support. If we do break below this rising support right here, then I'm pretty much going to be convinced that that new lows are coming, and we're going to start another leg down. And I think that could be towards the end of January, February, in that ballpark. But this setup is about as good as it's looked for SPY to be able to really break out of this big bear trend that we've been in for so long, over a year, essentially. You can see all the multiple rejections that we have. I talked about this on Twitter, where a lot of people already had us out of it. The way I chart and do trends, we are not out of it. We are getting close. Looks like SPY printed an inside bar today. But like I said, you've got a clear golden pocket rejection right here. So it's, like I said, it's just kind of wait and see. And until we get clear directions up or out, and I've talked about already, this volume here is waning. It's dropping off. Very little to no volume today, probably due to all the halts that happened at the beginning of the day. I think there was like 84 halts that happened. So, but if this breaks, but the volume is still very weak, or it's even constantly decreasing. In my opinion, it's probably going to be a false breakout. 412 is really kind of that 412, 413 number is really kind of my line in the sand numbers. We start getting above 412, I'm going to start to get a lot more bullish at that point in time. Let's hop over here to Microsoft. So on Microsoft, if you do a fib from the top that was back over here in December to the bottom that was here in the beginning of January. Once again, even on their massive earnings beat, you can see that 786 pretty much top ticked it, and now it pushed down really hard after that. So Microsoft is going to be interesting. I've got this kind of supply zone that's been drawn out right here, and it's in this kind of 243 to 245 area, where basically it's a bullish on Microsoft above that, bearish below. Obviously pushed right through with earnings today, but now, I mean, this is going to be, I hope you didn't play earnings on it. This is going to be, because it closed, where did it close? It basically closed at 242. So, I mean, there's going to be a whole lot of IV crush on Microsoft contracts. I hope you weren't in those because they're going to be down, period. I mean, unless something crazy happens overnight and shoots way up or shoots way down. But as of right now, they are going to get IV crushed to death. So now that, you've got that serious rejection here, I'm going to look at this supply zone to see what happens with it. I would play puts in the supply zone unless it proves that it can get on top of it. Otherwise, I'll be playing puts below. Coming back down here at least to the 236 to 230 range makes a lot of sense with Microsoft. On Amazon, I actually played Amazon puts today. I'll just get in here and show you real quick. Took longer than I thought, but basically after the original big push down, then it just kind of made this real weak rising wedge on descending volume, and I was in puts, and I really thought Amazon was going to finish much lower than this today, but was able to take about 30% profit right here at the end of the day, and it's just, Amazon, you can tell, it's all kind of rolling over in this symmetrical triangle. Looks like it wants to test maybe the support again back down here to, 95. But I mean, whoa, it is really getting beat up. So I still have puts in Amazon, and man, things are going to print tomorrow. As of right now, once again, a lot can happen, but as of right now, those things are going to be printing nicely tomorrow. What you could see it open, and like I said, the volume has picked up there, but what you could see it open is a push up to test this previous trend line before rolling over again. I've got Amazon marked out here. Let me back out. And it's got a supply zone basically from 102 to 104. So I think that's going to be a quality place to potentially look at puts until obviously it can break. Dude, I do not know why my trading view computer is running so slow right now. Apologize for that. But you can see it all right in here was a lot of support. Then you had the big summer rally push up now acting as resistance. So it's either going to come up here or it's going to kick. As of right now, it's not even going to make it that high. So, but if it does, I think that's a good place to look at puts. Amazon just has to hold on to this 81 level. That's going to be its COVID lows, or it could potentially get ugly. They do have earnings coming up. If we take off the extended trading again, go back to the regular hours. I've talked a lot about this, but Amazon's got gaps right here and right here. So basically 89 and 86. I think that's going to be some good, fib levels. So I do think we've got some. So yeah, basically the 707, but probably the 786. I think Amazon looks like it kind of wants to roll over to 85. Now that might not be, that's not going to be tomorrow or anything like that. But I do think Amazon is, probably going to see 92.50 tomorrow would be my best guess, depending on what the overall market looks like. All right, we're at 9 minutes, 40 seconds. We're doing good. Cat, I've talked a lot about this one on Twitter. I played puts right up here, closed out puts for like 35%. Now it's coming and pushing back up. It's basically in this ascending channel. What you want to look for is right now what I'm eyeing is, are we going to see a double top right here in this range? So a double top is basically, just reverse of a double bottom. So a double bottom, you get 2 touch points and then you get a push to the upside. A double top is the exact same thing, just the bearish version. So if it does, start to get on top of this 260 range, then you potentially could see a push all the way to 263. But more than likely at this point in time, it looks like it's going to look for a push to test support right around 250 more than anything. Nvidia has been playing really strong lately. I talked about on Twitter how it looked like a really nice inverted head and shoulder. So you got shoulder, head, shoulder right here. So just like I talked about on the double top. So a head and shoulder, with a bearish and then a push below. An inverted is what you can see here. So I'm really kind of eyeing this 194 range as the neckline. And once again, it's a range. It's not an exact, dot. But if this does, continue to get a push out, a good price target is going to be kind of the length of the head. So, that could, potentially, and I saw Nvidia also got a stock upgrade from like 170 to 250 maybe. That's obviously going to help. You can see the volume has been increasing on this pump, which is always a good sign. So I would be looking at maybe, at least 217, even potentially up to 265. Now, I do think that, that's probably going to take a little bit of time. Once again, that is not tomorrow. Please don't go buy crazy out of the money calls. And if you don't know what that means, then you shouldn't be buying calls, period. Nvidia's earnings looks like is scheduled for right now on Wednesday, the 22nd of February. So a decent little run up into earnings. And you can see, which I'm just kind of seeing this right now, is you've got this gap down right here. Pretty much lines up. So basically a gap all the way to 258.71. So, and you can see there's multiple gaps right here. So, you just got, there's 230 and basically a 260 gap for the upside for Nvidia. So Nvidia does look good. Once again, RSI is just a piece of the puzzle, but the RSI is getting a little warm and it's coming up here to resistance. So some retrace makes sense before those pushes happen. And if you, let's just kind of look at what would make sense from a retrace standpoint. So coming back down to maybe like 173 before a continued, push up. So it would look something like a here, like a 382 is usually pretty bullish retrace before starting. And you can see over here, you kind of have these little double humps. So maybe even coming down here, maybe even all the way down to 160, would be that before a continued push up. All that makes a lot of sense. That's why you just got to take it one day at a time, one level at a time. Don't be a super bull. Don't be a super bear. Just do what makes a lot of sense. On Tesla, I had this rising wedge mapped out. It has broken above as of yesterday, and then actually came down and retested today and did get a push up. It's got a spinning top. You got Tesla earnings tomorrow. Contracts are super juiced. Please don't do anything, stupid here. Microsoft's going to teach a lot of people a lesson about IV crush, it looks like, as of right now. Let's go back and look at it. Still just kind of hanging out in that area, it looks like. Yep. So kind of just hanging out in that 240 area. So basically, when it's going to open relatively flat tomorrow probably, and that's just going to kill contracts. So that's what you got to be knowledgeable about. Sorry, let's go back over here. So Tesla, I said it might get this gap fill at the 150 range. I don't know, man. I kind of said this week, you just look at this. I just don't like the look of Tesla right here. Overall, it's just the volume is really drying out. Now, that also makes sense as things get more and more juiced before earnings. I was talking about this with my Discord today. There's no doubt about it. I mean, look at this overall volume right here. When Tesla came down here, hit this 382, got in that $100 range, 100%. People were stepping in to buy that long term. So I'm pretty 50-50 on Tesla. My bias is still towards the downside. I still think there is a real potential for Tesla to get down to that kind of 60 to 80 range. Don't know that it'll happen. That's just what I'm thinking. Okay, I've talked multiple times in multiple videos about why. But like I said, it all depends on what the overall market, I really feel like, is telling me. So this just is not super great, other than the fact that, like I said, definitely the volume is there. But Tesla's already talked. They got the price issues. They missed their China deliveries on what they thought they were going to get in the fourth quarter, and just with all the price cuts, and Elon's been very bearish about the Fed and all the rate hikes. Elon's been selling a whole bunch of stocks, so, and a lot of that was with the Twitter deal. Okay, I get that, but like I said, it's just overall, in my opinion, not a great look. GME is in it was in basically kind of this bullish pennant. Right here is breaking down after hours, but once again, it's after hours. So if by market open, it's back inside. That's going to be the continuation look that you want to get for GME. The look that concerns me on GME is going to be the double top. I talked about that on Twitter. So you really want to see, some pushes towards some higher highs pretty quickly, and then you really want to see it staying over this 1950 range, which is going to be where it was really holding support back before it split. Back in the summertime. So like I said, definitely want to see it holding over this 1950. Otherwise, you're going to, downside, getting pretty bearish if you kind of break this line right here, right around that 1850 to 19 range. So it gets pretty bearish. So if, GME, you start to do, one of these numbers, I could absolutely see that happening, especially once again if the overall market looks bad. If the overall market looks good, then a push out of this might be what you'd be looking at. And like I said, you can kind of take some guesstimating targets here. So pretty much already hit the 0.5. So another push out of here, could lead up to the 24 range. Relatively short term. Okay, I had sold GME puts for 1950 last week, and it closed at 1960, so I missed getting a bunch of shares at 1950, which always sucks when you see it up here in the 22-21 range, but is what it is. Real quick, AMC already posted about this on Twitter, but broke down out of that formation that I talked about. I said I didn't love the looks of it, but is still holding support. Obviously got the big old gap down here that probably going to need to be taken care of at some point in time, but could it push up from here? Absolutely. But it really needs to get moving. It really does. If we kind of, adjust some of these looks. Once again, I'm just kind of drawing this out quickly, but you can kind of tell that, if we kind of do it. It's looking a little bit more like a descending triangle, so push up here. So basically a test and a push down on another test, and that would take some time, and that would kind of give it, it's not a great head and shoulder look, but kind of something along those lines. I think, well, again, I'm not a fortune teller, but I wouldn't be surprised at all if something like that happens. And it might just need to come down here to 618 before continuation, but this is overall what I'm looking for on AMC. Like I said, still has the gap down here. Especially if you start to see any of the selling pressure pick up, you definitely don't want to see that. BBY, I rode puts down here, caught a bounce in the golden pocket. So from its most recent move, did catch a bounce in the golden pocket, but did get rejected off the 0.5 today. So, it's got to get above the 0.5 if you extend this out. Look at that. So, this trend, which was support, and now is acting as resistance. So, overall, that's not a good look. You would definitely want to look at recovering that as soon as possible. If we extend this guy out. Yeah, and so I mean, so it got rejected off support, and now you're still got this kind of bearish trend that's going on right here. So that's pretty much that. Oh, Apple broke its 4-hour, retested and pushed up. So Apple actually does look decent here. However, the overall market's going to need to stay pretty decent for Apple to see a continuation. But I would definitely 150 test again, coming up in here, right around 150 or so, I think makes sense with Apple if the overall market can hang on. So, see how long we're at on the video. I think that's pretty much going to be it today. Yeah, right at 20 minutes. So that's going to be it for this video today. Like, comment, subscribe, join the Discord in the comment section if you want to. And other than that, I hope you have a wonderful day. Stay safe, stay calm. Look at everything from both sides. Don't just be a bull. Don't just be a bear. Make great decisions for yourself, your family, and your portfolio. Much love, my friends. I will try to get a video out on Thursday. Have a good one.